everybody. Welcome to TraderMerlin Show. It is your Friday edition. Happy Friday, everybody. Cheers. I've got my nice glass of whiskey on here today. As I mentioned, it was going to be a whiskey type of day, and certainly is. So cheers to everybody in your cold, frosty beverage. Hope you're done with work already. If not, hope you're done soon. And before everybody asks, "Whew, man, that's a strong whiskey," I got a Texas rye whiskey from my cousin. Sent this one on in. A very nice, tasty one. So I'll be enjoying that throughout the show. Cool. I wish I was having Pappy Van Winkle. That was a pretty fun episode of Heist, if you guys watched that one. Very interesting how the guy got off only with 30 days worth of jail time. Pretty impressive. Okay. I've got a lot of different listener questions, which is, of course, what I usually base Friday shows around. If you have some, type them into the chat here. I'm happy to go over just about any topic that I can. There's been so much that happened this trading week, so we'll do our best to get through it all. So here is my wonderful graphic for the week. I think I have so much fun making these graphics out there for everybody. It's very entertaining for me to do. This week is representative of the FANG stocks. Of course, we had some of the major companies reporting this week. You had your Facebook, Microsoft, Amazon, Apple, all those reporting. The only FANG stock that didn't report this week was Netflix. They reported the week before. So let's get started and run down that list. And yes, we should all go to Indonesia. I am a huge fan of, yes, I was a little bit late getting the ice from my glass. The decision process here, Dana, wasn't the ice. It was actually which whiskey I was going to have today. I have a pretty good collection. So, well, Daniel, if you need a drink, I will happily cheers for you. Okay, so with regards to the FANG stocks, we'll start there and work our way down. Almost every one of them beat earnings, and what it was mainly the statements about earnings going forward, which is why we saw Amazon actually kind of disappoint yesterday or last night with their earnings, and that was kind of a little bit of a wait for the tech market today. Now, all the big mega cap stuff is out of the way, which is good. We can now focus our attention on other things. Next week in particular, to me, it really starts to shift that focus to energy. There's like 15 different energy companies reporting next week. And if we saw what happened with energy for the month of July, it wasn't good, right? So let me go through the numbers here. Actually, I'll go through a few numbers here and then we'll go back. I'm going to show you this picture or this graphic I put together, and I apologize if things jump around. I'm trying to use a template and it just takes some time for me to put this thing together. But here's how our 11 sectors of the market stacked up. So overall for the month of July, S&P was up 2.03%. Then let's just put them all on here. Let's get them all out of the way. On the left-hand side, you've got all the positive stuff. On the right-hand side, you have the negative stuff. And you can see only 2 or 3 sectors were negative for the month of July. Industrials are down 0.33%. Financials were down 1.11%. And then energy just giving back a lot. I mean, energy really tanked in the month of July, down 10.5%. Clearly the biggest mover by over double of anything else on this list. Now you look at the positive side. It was a great month. Discretionaries were up 0.76%. Communications up 1.34%. Materials 1.35%. Staples 2.2%. Utilities almost 3%. Technology over 4%, and I got those shuffled around. Real estate having a nice little pop to the upside, and healthcare. So you really have 2 that are over 4% gains for the month of July. Looking pretty darn good, and I think that this is obviously a very optimistic sign because we are in the midst of this sell in May and go away mantra that so many people go by, right? And it just didn't pan out this year. I mean, we had a pretty positive run for the past couple months. Now, we'll look at some charts here just to see how it all stacks up. Someone was asking about BitQ and BitW. We'll talk about that in a little bit. Here's your gold chart for the week. Actually, this is the daily chart, so we can see just the last 2 days have really been an about face. Today, you're down over 1%, whereas yesterday we had that nice big pop to the upside right into an area of supply. And as one of my viewers, I believe Jeff was asking about cup and handle patterns. You might have one forming on gold as well. Let's see. I'm going to start at the bottom, work my way to the top. So we'll start with that was gold. We'll go to the Russell 2000. Really unchanged. This box has been in place for quite some time where I'll just keep moving it to the right until it breaks up or down outside that yellow box range. Not much to talk about with regards to the Russell 2000. Channel bound, not really nothing noteworthy there. Now, Nasdaq is the interesting one. It hasn't really fallen apart, right? It's had, out of this week, it's had 4 green candles, 1 red candle, and kind of holding its own, even with some of the negative news around these mega cap stocks. particularly Amazon. So all in all, I'm still actually rather optimistic for the Nasdaq, although my gut tells me that pullback's coming, but the price chart just looks pretty resilient, like it shrugged off most of the damage this week. S&P, similar situation. S&P barely moved this week. It was 5 consecutive days this week of very tight ranges and not a lot of directions. You guys can see right here, we're pretty much sideways. And now the longer we stay there, the more likely we are going to move to the upside, right? It's think of this as a pause. So in any race, when you have a sprint, generally those guys stop at the end, they put their hands on their knees, they pant for a little bit, take a break, and then they go back and do some more heats. So it's that pause moment in the market that this is looking like with regards to the S&P 500. Now, I'll keep moving up. We've got bonds. Obviously, the talk track for bonds is that yields are falling. Today, we saw yields fall just slightly, and a similar picture. We're seeing sideways consolidation. Hello, Lufthansa, my favorite airline out there. Oh, actually, number 2 airline. Asiana is probably my number 1. Lufthansa is a very close number 2. And then crude oil. So we talked about energy being beaten down, but look at the price of oil, right? It's had a huge rally up on this daily chart, really since mid-July. Now, for the month of July overall, you're seeing some troubles with companies in that space, oil companies in particular. So we'll look at some charts here in just a second. But we really did an about face, almost recouped all the losses on crude oil for the month. And to put it in perspective, I will do a monthly chart of crude oil, and you can see I've got some old lines on here. You can see it's a huge range for the month, but pretty much closed right where it was at, right? Not that big of a deal. So we'll have to wait and see how this one ultimately pans out. It's looking more and more positive day by day, which might make energy a buy, thinking about buying those dips. I heard somebody, a lot of people talking about buying them dips. So looks pretty good here for crude oil. And of course, number 1 for the day anyway was Bitcoin up 2.77%. Still not sure which way we're headed. Obviously, I'm biased to the upside here, certainly long term. What's good about Bitcoin's price chart is it's ended this kind of slow traverse down, although we did stall right at these highs, right around 41,000. It was kind of a logical point to stall. If we can close above that, then all of a sudden I think 50,000 will be there achieved in almost no time. Right now I think people still are a little bit cautious on it, but if we can get that break above, then we've got some great upside movement. So that's kind of a market overview running through your top 11 market segments over here and really seeing how unbalanced it is. It's extremely heavily weighted towards gains, which it makes no shock here because it is that trend is your friend and most of the stuff is moving up. The big surprise for me was how much energy was down for the month on XLE and things like that. Pretty big slide there. Now here is the chart of XLE in case some of you are wondering what do you trade to use that as kind of your proxy. There's your month. Pretty ugly, although it's well off the lows, right? We're certainly well off those lows on energy, but still a 10% decline at the end of the month. Let's see. Les says, would CL be a hanging man pattern? Let's go to crude oil. Oh, on that monthly? Oh, that's a really tricky one. I personally am not a fan of hanging man patterns. I don't really believe that the textbook is saying the truth about them. So technically, I would have to say no, this is not a hanging man. I mean, the basic definition of a hanging man, for those who would like to know, is it looks very similar to this, where you have this long bottoming tail. It's not supposed to have a long topping tail. So after an end of a rally, or during a big rally, if you see something like this with a very long bottoming tail here, and pretty much no tail at the top, that's a hanging man, and in theory, that's a reversal pattern. And I disagree with the textbook version of this. Because if I have something, let's see if I can do some artwork for you guys. Let's say I'm going to draw a bar chart, right? So I'm going to draw a bar chart, and we'll do it this way. This is old school artwork. So we have something that opened up right here, right? This is where it opened. It had a trading range where it went up a little bit, went all the way down here, okay? At some point, somebody stepped in down here at the bottom and said, we're going to push this thing all the way back up. And really what you have with the hanging man is it closes over here. So there's your close, and there's your open. Right? That pattern ultimately is going to be a green candle because it closed higher than it opened. That's pretty much what we have today, or for the monthly candle on crude oil. So there's your CL. If I look at this as a battle, and remember, I'm really red today. My camera sucks. If I look at this as a battle and say, who won this battle, right? It closed right up here, which means that it closed right here, which means that those buyers stepped in and pushed it all the way back up to the highs. To me, that's a real sign of momentum, because at one point we were down way more than we are now, right? So the buyers said, okay, we've had enough, we're buying those dips, and ripped it back up. So a hanging man, by definition, should be bullish because it closed. That battle finished with buyers stepping in and driving it higher. That to me is a pretty positive sign. So, this crude oil chart, even though on the monthly you do see a close hanging man, right? A little bit too long of a bottoming tail. I know, Big Eb, sorry. My whiteboard sucks today. I just have been too lazy to do other things here. I've been wanting to set up a second whiteboard so I could draw on it over here off to my right, but maybe one day. Right, so good question, Les, and I think what I'm going to do is I'm going to jump into some listener questions because there were multiple here. One was from Jeff, and they're both on the same basic pattern. So let me read this one to you guys. Here's a question from Jeff. It says, my question is regarding the cup and handle pattern. Bill, and he's talking about, William, I've totally drawn a blank on the guy. He basically created the Can Slim. Bill O'Neill, William O'Neill. Basically started the Can Slim methodology, which is an investment methodology, which I think is fine. It just establishes rules. He says, Bill likes, in regard to an inverted head and shoulders pattern that John Bollinger Band references in his book, Bollinger on Bollinger. John mentioned inverted head and shoulders pattern or a W pattern. Okay, so he says these two patterns are very similar in shape. Can you do an analysis as to why these two patterns seem so common? Well, I mean, really the reason that they're so common is we see them all the time. And I'm a firm believer that a price chart is, again, like a tattoo. It will tell you what is happening in that specific time frame that you're looking at based off the candles. And it's not just, it went from here to here. You can see the buyers or sellers winning that battle. So if we look at what a cup and handle formation is, and it's easier for me to draw this stuff today. I just don't have my all my tools with me. I'll draw a cup and handle for you, and I will draw a W pattern. All right, so the pattern here, which I'm tapping my finger on because I think it's backwards for you guys, the one over here, you can see it's got a cup and handle, which basically means price came down, rallied back up to previous high, and then sold off, but didn't quite go as low as the previous, and then rallied back up. This is a very strong sign that buyers are stepping up to the table and they're pushing things higher. The other one that looks like a W, that's just a double bottom. It's no big deal. It basically means price came back down to the same point twice, so we can establish a demand zone or a support level if you want, depending on how you reverse it, or how you read it. If I have those two lined up, if I had to take a double bottom or take a cup and handle, to me, cup and handle is far superior than a W. Because remember, a W came down to that same point twice. That means that the buyers never really stepped it up. If the buyers were strong in that situation, they wouldn't have let the new part of the chart, the new data, drop as low. And that's what a cup and handle tells you. A cup and handle says the buyers stepped up and didn't let the sellers push it down as far. So there's a sense of optimism there. It's all psychology reflected on what those two different patterns. And one of them clearly is more bullish than the other. Very, very. Welcome, Catherine. Good to have you with us today. So I'll give you a resource. You also asked if there was a way to let's see, where's the second part of your question? There you go. Is there an indicator that will search out the C and H patterns? I don't believe, not in TradeStation, but there are some resources for you. For example, let me bring one up here. I will bring up a website called FinViz, and I'm a fan of FinViz. I have no affiliation, again, with anybody. I would love an affiliation with a popcorn company or maybe a whiskey firm, but we'll take what we can get. So here is FinViz. And if you look at the top here, simply go to their homepage. And then I scroll down, and there's a bunch of different pattern stuff at the bottom. So you could potentially look at ascending triangle as a cup and handle, right? So let me draw one more piece of glorious artwork for you, and you guys tell me what it is. So let's go back to the main screen here. I will draw this price pattern here. And you guys tell me, type in the chat, what is that pattern? Let's keep it PG, guys. I don't need to see, it looks like somebody's booty. No, what pattern is that? Well, we just showed it to you, all right? And in theory, you should look at this and be already thinking, okay, great. This thing looks like it's building some strength because it's making a higher low, right? Therefore, this pattern is, hopefully you guys are typing it into chat right now and making it somewhat engaging for me and fun. It's a cup and handle, Well, it's kind of a large handle, but you've got a cup and handle formation, right? Okay, fantastic. So if I got a cup and handle formation, what happens if I have a pattern that looks like, and I'll draw a line across the top. What happens? No, Tony, it wouldn't be a W because W's got to be equal bottom, and that was unequal. It was there was a little bit higher. But let's try, Tony. Now, okay, let's go here. So now all of a sudden, cup with heavy handle, right, Les? Exactly. So now what happens? Let me keep this straight. Here's the same thing. Now what do you type in the chat what that thing is, right? You can run filters that more commonly will find this pattern versus a cup and handle, and I'll show you that here in just a second. This is called an ascending triangle because notice the lows each time are getting higher. That tells you the buyers are gaining strength, right? They're willing to pay a higher price for this thing. So to me, it's not a double-fisted Starbucks, as I like to make fun of. I know, believable direction. Hey, Tony, it's not a bad. It's okay. Don't worry. No, you're not wrong. I mean, you could argue it was a double bottom, right? A W, but it's slightly off kilter. But if it's even at the bottom, it'll be a W. If it's slightly tilted up, you call it a cup and handle. Okay, so yeah, it's an ascending triangle. And to me, that ascending triangle could have like 8 different handles on it. It just keeps getting stronger, stronger. Believable direction, you are correct in saying that it's a triple top because it's a good observation, it's hit that top, right, multiple times. Now the point here, which makes it, let me see if I can get that lined up. What makes this one exciting is every time it hits that ceiling where that horizontal black line is, it's taking sellers out of the equation. It's going and removing supply. So the more times it hits that ceiling, the more likely it's going to break through. And if those the lows keep getting higher, it's just building strength. So again, it's not like you're putting so much emphasis on, oh, I found this pattern. It's more important of the pattern is telling you that the buyers are taking control in the graphic I just showed you, in my primitive graphics here. I know. It's Friday. I've got whiskey. I got a bunch of stuff to do. That's right. It's quiz time. Hey, Simon, did you get the poster? I think I sent it out to you. Hopefully it got to the right address. I forgot to put my note inside, so I hope you got the scratch-off poster. And Tom, I still owe you that scratch-off poster, which is sitting over here all wrapped up, ready to go. I was going to hopefully meet you in person and just maybe have a beer or something and give you that poster, but we'll arrange something. So, where do we find these things? First off, I will say this. Most scans and filters that are looking for cup and handles, triangles, they're pretty bad. They're really not that good. That said, we can use filters that are out there and look at them and say, this would be a good one, this one would not. Okay, cool, you got it, awesome. So let's look out here. If you go to FinViz, as I showed you earlier, you'll notice there's a couple here. You can see it's got double bottoms. Well, some of these might actually be cup and handles, just drawn incorrectly. And if you look at a lot of them, you got to kind of, be objective. Let's see if I can do it one by one. Oh, I can't do one by one, unfortunately. But I will. I'll roll through here and see if any of these appeal to me. So right here, you've got this, what they're calling on TIL on the left-hand chart here, calling this a double bottom. Is that a double bottom? It's really a triple bottom at this point. And you could make the argument that it's making lower highs, so it's getting weaker, but I wouldn't call this an inverted cup and handle. It really feels like this thing is just channeling sideways. I would put a yellow box on it, call it a day, but to me, that's not really a double bottom. It's more of a triple bottom. Let's go. Are there any good examples in here? Okay, here's a good example. Here is AUY, right? This is Yamana Gold. Now, this is a $4 stock, so I wouldn't trade it anyway. It's just not my thing to trade $4 stocks unless I'm taking a flyer and hoping to make a gamble trade. But notice that the lines drawn on here aren't bad. It's making lower highs, so clearly it's been getting weaker since last year. And it does have a good double bottom. It's literally only touched this part twice. Now, could you say that this is a cup and handle? Not really. I think it's got some more room to do. It needs to really form the handle. It's got this big piece here, which we could say is an inverted cup, but it doesn't have the handle. So we've got a double bottom, but not really a cup and handle formation. Let's go and see if there's any other decent ones. Here's a good one. HDRO, right? So here, this looks like it. This is a weird looking chart, I'm telling you that. HDRO got a nice double bottom, but it really hasn't formed the handle yet. If this part here drops down and comes back and challenges that $20 mark, we have a cup and then we'd have a handle. Bottom line is, it looks like prices are going lower, sellers are pushing it down. Easy stuff, right? That's this is actually a decent example of a descending triangle. You can tell lower highs, almost this entire chart. I just don't know why it looks so weird. Let's go HDRO on a different platform. HDRO. Ah, this must be something that's brand new or relatively new. All right, so there's your picture. Looks like just a downtrend to me, but we could argue that there is a descending triangle here forming because we have this lows coming in all the way down this thing, making lower highs. I always put this in relative. And then there you're bouncing across the lows around 20. So this one could potentially turn into a cup and handle. Right now it looks like a double bottom. Now, this goes back to a question, and we'll continue to look at some of these ones here for everybody. Michael said this, it's broken handle, right? It's the broken handle pattern. Michael sent this question about Apple. He says, where's the chat? He says, daily chart of Apple, do you think the double top is done, or is there more downside to go? Okay, well, if you look at the chart of Apple here, I mean, I think we'd all agree that was a pretty decent double top, right? We came in, smacked our head against 150 on Apple, sold off, and then did another aggressive run at it, and then it gave up. All I care about is what's going on with the part of buyers and sellers here. That's all that matters to me because that's what I'm trading. I'm trading buyers and sellers. In essence, I wouldn't be trading Apple here. I'm just trading price. And at this point, this last attack, the fact that it failed at 150 and did not make a brand new high, is its first like negative strike against it. It's hard to short Apple because of this chart. I mean, it's just absolutely beautiful, just strong, 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 especially since June 1st. Now, if this is truly a double top, and then Michael's question was, is it done? For me, there's only one way to measure if it's done, and that's I measured to the low. We'll do a snap here. And this is my way of doing it. I put it right to the low of the previous candle. Why are you not snap moding? Delete that one. Okay. So you can see that on the 19th of July, that was the low after the first sharp pullback. It was a 3-day aggressive decline in Apple. Then it rallied up. So the only way I would say this double top is done is if we get below 141.67. That's the only way that I would say it is officially done as a double top and followed through. This thing could just traverse sideways for weeks. Who knows? Right now, it looks like we're just channeling. I can't really make any assessment of it because it's making technically a higher low and a lower high. So maybe this turns into a pennant formation or kind of a compression piece here with regards to Apple. So Michael, I don't know if it's done. I mean, this is Apple, who just doesn't ever seem to stop with regards to market trajectory. It always seems to be moving up. Right now, it certainly feels a little bit weaker than it has been, but I don't think that this is done quite yet. We'll have to wait and see how it pans out. But this goes back to our discussions of this would not be a W, this would be an M, right? Right, you get the big M formation there is an inverted W. So let's go and see if I can remain in drawing mode, and I'll show you guys exactly what I mean. We talked about the W earlier. Well, this is simply the M part of that. And right now, that's where we're at, right? So we really need to break that base, that 141.67. If that happens, Apple could see some decent downside move here, but it's got to close below 141.67. Cool. Tony says, homemade apple moonshine. All right, I would love it. I'd gladly drink it. Don't be spiking with LSD or anything like that. I saw Kristen here talking about, what was there some acid comment coming in earlier? It's like, hallucinogenics? No, I'm good, guys. Where was that? And shout out to Chris. Hopefully, you're probably sweating away up there. He says from Mayberry on acid. Yeah, Mayberry. I hope that, I actually love Fairfax. You got an awesome little town up there, man. I'm glad you're enjoying the NorCal. I'm down here sweating away in SoCal. So, Catherine says volume is a good odds enhancer. Agreed. I think when you look at these price charts, it's one thing just to look at the price patterns, but volume will help us understand the emotions that are going on at a specific price point. And I'm always looking at volume. Again, I like to berate a specific individual, A, because I think he's an idiot, and number two, he actually says that volume is not important. And I could not disagree more. I really think that volume is critical for understanding breakouts and seeing price movements overall. To me, Apple looks like a bullish flag. Great. Okay, that's a good one. So this is just a matter of perspective, right? And I like the fact that you said that one. Let me take out the W or the M here so we can kind of analyze this a little better. Technically it's not a flag, but I totally get why you would say that, Lufthansa. And here's why. If on a daily, it's not such an aggressive sharp move. Normally with the flag pattern, it's really a ballistic move. Now granted, moving from 122 all the way up to 125 in a period of a month is pretty damn strong, but it's not parabolic. And this could be construed as a flag, and I will draw on here. Of course, I love my yellow boxes. Throw that yellow box on here, and right now I feel like we are in Apple just stuck in the range in that yellow box. If I change the time frame and go to a weekly, now all of a sudden you have yourself what I think is definitely a flag pattern, right? You've got this aggressive move up, and then it just went sideways. And this is very akin to what we saw on some of the charts when I started off kind of market analysis, right? You've got a big rally, an aggressive push. There's a lot of energy there. And then you have things go sideways. That's the relief. That's where the runners are pausing and hands on the knees going, okay, let's regroup. Are we good? Are we going to go down? And they're just kind of waiting. So that's why I put that yellow box there. I'm a huge fan of setting boundaries. And if we get a break above that, it's easier to see on the daily here. I would move this yellow box up to 150 just because the whole number psychology. If we get above 150 on this, you could see the next big leg up, right? A next big move up. So, yes, I like it. I like that you call it a flag formation. Unfortunately for me, I'd have to change it to the weekly to put it into perspective. But bottom line, it tells us the same thing, right, Lufthansa? It's an aggressive surge in price followed by a hesitation. It's a big move up or down. And again, it's got to be a really aggressive move up or down followed by hesitation where things are just going, let's wait and see. Are the sellers going to come in and push this thing down? If not, when that thing breaks, it's going to rip to the upside again. All right. Is that the town motto of Fairfax? I grew up in Fairfax, right? That's where my mom's best friend lived in Fairfax, and she was dating Robin Williams, who was my babysitter in Fairfax. So there you go. Can they track it? Question. Okay, one sec. Let me go back up here. I'd have a hard time shorting a company with over 2 billion customers. I know it's hard. It's hard. And there's some times where I look at Apple and go, where they're really losing market share to somebody like Samsung or some of these other companies. But there you go. Kleine Lufthansa. Bitte schön für alles. Okay, let's see. Let's go to Patrick's question. Why don't I just take all my dollars and I'm making in real life at my day job and putting every single cent into Bitcoin, not pay back the banks anything, file for bankruptcy and go? Oh. So let me stretch that crazy scenario out there, Patrick. What you're saying is, why don't I max out my credit cards, buy everything I can in Bitcoin and digital assets, right? So let's say you got $10,000 limit. You'll go to, one of the crypto exchanges that accepts credit cards, max it out, right? Max it out. And then as soon as you have all your assets in Bitcoin or a cryptocurrency, not on an exchange, because that would get you caught, then you basically would say, oh, I'm going to file for bankruptcy, and they would probably try to come for the assets, and you say, oh, I sent him to the wrong wallet, it's gone forever. Yeah, other than the fact that that's just wrong, and I could never do something like that. I wouldn't put it past people to do that. Obviously, if you did that, so let's say you had 5 credit cards with $20,000 each, so you got $100,000, you could buy a Bitcoin, you sell everything, leverage everything, maybe even sell your car and just try to buy all those. You could do that, but you probably have a hard time getting back into America. Because I'm sure that it depends on how much. The credit card companies would probably be coming after you. Of course, you can make the argument that you sent it to a wallet address and you lost the private key and it's gone forever. But as we've seen, you can track cryptocurrency transactions. So they would be able to see where that currency went. So if you bought it on an exchange or through a credit card, then you moved it, they would see where you moved it to. Now, I don't know what the bankruptcy fallout would be, but you could certainly do something like that. If you did, there's ways that you could abscond or make that money disappear. There's a lot of things you could do. You could do that, Patrick. You could definitely do that. I personally would not. I don't think putting all your money into Bitcoin is the way to go. I think that it's just a portion of a portfolio, right? Now, there are some people that think that this is the greatest thing ever and it's going to be the only thing. Oh, okay. But I'm not taking that calculated of a risk forever. Yeah, and Big Eb says, looking over your shoulder for life sucks. Look, if you did that and you went to Southeast Asia with $100,000 worth of cryptocurrency, you probably live out a very, very long time there and live like a king. For $500 a month, you can live very comfortably in Asia, especially in Southeast Asia like Thailand. But Yeah, I don't know. Not for me. If you might want to reach out to me individually if you want to have that discussion. I can get cash on my credit card. Yes, you can. You can. I think what he's alluding to is the fact that you just want to basically get free crypto. So you max out your credit cards with crypto, then you declare bankruptcy, and the credit card companies come searching for some money or assets, but you don't have any because they're on a paper wallet or they're on your Nano Ledger S here remotely. Anyway, nice curveball out there, Patrick. Thanks for that one. Okay, what else do I have question-wise? So I already did the one with regards to John Bollinger. John Bollinger likes W's. William O'Neill, who is the canceling method, he likes cup and handles. I like them both, but I prefer a cup and handle formation. Remember, all those patterns I just showed you, it's the same thing flipped upside down. So it's the same thing that way, it's the same thing that way. It's just a sign of strength or weakness, and it all revolves around psychology. Yeah, Jason, I haven't spent much time in Indonesia. My buddy who introduced me to Southeast Asia, he's a huge fan of it. I just love the area, so be good down there. Let's see, what other questions did I have? I had one from Tom. I'm going to do Tom. Tom's with us today, so we'll get Tom's question out. And here's Tom's. He says, many companies are saying they will accept Bitcoin for payment. Will they price in Bitcoin or price in USD and calculate the payment in current Bitcoin price? It would be crazy for a company to say, and this is why I thought it was weird, like the Oakland A's were saying, season tickets for 1 Bitcoin. Well, somebody who bought that a month or 2 months ago paid $60,000 for season tickets. Somebody who bought it 3 weeks ago is spending $29,000 for season tickets. To me, that's different. I mean, to me, it's too dangerous as a company. If I was a company, I would still quote you in U.S. dollars. And what I would do to reduce my risk exposure. So here's the problem Tesla has if they accept Bitcoin. Or Overstock, right? Overstock accepts Bitcoin for things. If I buy a brand new bed set, let's say for $5,000 from Overstock, and it's quoting me in U.S. dollars, and I pay with Bitcoin, great, no problem. Overstock now does that transaction. There's a third party which probably takes a small percentage, no big deal, and Overstock will get, let's say, $4,950. $50 is commission fees to some third party. The background, Jag? I just made this background up. It's a green screen. I can put whatever you want there. It's Friday. I should have Friday be like beaches and warm weather. So when you look at the payment, the risk to Overstock is, boom, they get paid in Bitcoin, and now that's sitting on their balance sheets. Look, it went from 60 down to 30. That hurts. So if it was my business, I would accept Bitcoin, no problem. But as soon as those payments hit the account, I would automatically convert that back into US dollars to reduce my risk exposure. Almost always do that. Yeah. So to me, all businesses should accept it right now. I think every business, there's no risk to any business as long as they convert it right away into their native fiat. So I don't know. I think it's kind of silly that more businesses don't accept it. Buying a car, what's the problem? I'm already waiting in there an hour anyway, so who cares? As long as they convert it back and reduce the currency risk or the Bitcoin volatility risk, that to me is the interesting one. All right. Oh, you guys are fun. You mean what's my personal experience? What's your background first? So I don't think I've ever really talked to you guys about my background. Well, let me make sure I get through these listener questions. It's 2:35. Okay, let's do that. I may bore some of you. I think some of you may have heard my background before. I'll walk you through it because it may be of interest to some of you that are in that financial world. I grew up in Northern California, kind of out in the sticks a little bit. I've always been fascinated with money. My parents were the type of parents, and hopefully my dad's listening, that if I wanted something, they'd be like, great, go get it. I'm like, oh, cool, but I want it. And they go, well, you got to earn money to buy it. And they just kind of kept pushing on me that if I want something, I have to earn it. So I am one of those guys that has a very strong work ethic. I've been working full-time my entire life since I was right around 15. I was actually working at 14, taxable, and before that, at 9 years old, I was shoveling horse shit for my neighbors and had a paper out and then getting paid $3 under the table. So for me, money is critical because money helps you grow your money or achieve what you want to do. So I ended up just kind of studying all kinds of things. I love learning as much as I can. I think that they can't take away what you learn when you get to the grave, right? It's just all your experience and knowledge. To me, that's power. So I went to college for a long time, longer than I should have, and then my mom passed away, and I said, you know what, I need to just suck it up and move forward. So I got a finance degree. I worked for a financial planning company for a little bit, and I realized that for the most part, yes, financial planning firms are there to help you and guide you, but they're there to make themselves money. Period. It's a freaking business. And I saw for the company that I was working through, there was some stuff that I just was questioning, and I thought, this looks too shady to me. I don't like the way that this is done. You're not looking out for your client's best interest. You're actually looking out for your own best interest with the securities that you're pushing. So I ended up leaving the financial firm, and a friend of mine sent me an article about day trading. And it was in 1998, I believe it was the April cover of Forbes magazine. There was this guy named Serge Millman. And Serge Millman was this, Eastern European immigrant, played a lot of video games, barely spoke English, and made $800,000 in 1 year after taxes. And I was like, holy shit, are you kidding me? I'm scrounging away here to make money. I'm working my butt off. This guy made $800,000 a year just pretty much playing a video game. So I went to learn what he was doing. It was called day trading and direct access trading at the time. There were 3 schools, one in New York, one in Dallas, and one in Southern California. So I came down and checked out Irvine, California school. Took the class for 1 month, and then just went on one of the largest trading floors in the United States. We had one of the largest retail trading floors in the U.S. Traded there for a couple years. Started off really bad. Started to have a mentor, and they kind of guided me through the process of here's rules, here's discipline, here's risk management. And I was constantly learning from the people on that trading floor. And after that experience, or actually during that experience, I was headhunted by an Italian bank to come and teach direct access trading to the European community on a European commission grant. So I went over to Italy for a few years. While I was there, I was headhunted again or poached to come teach at Italian university. So I created the first trading lab at a university in Europe, and I had students from all over the world. I mean, our classroom was packed. Mind you, at this entire time, I have always been trading my own accounts. So started with equities, I moved into futures, and then into Forex, and then into options, and of course real estate the entire time. Now I do mostly cryptocurrencies, options, and futures with a smattering of equities here and there. So that's pretty much my experience. I have been trading full-time since 1998. Really got started in 96, but I wasn't that active. I was more investor as I was still in college. And I have taught thousands of people for Online Trading Academy. I still work for Online Trading Academy building content, but in a nutshell, that's my background. So if you have any other questions, fire away. I'll see what I can get you on answers. There you go. The paraphrased quick version. Okay. And on that note, I'm going to have another sip of whiskey. Adesso parlo italiano, sì. Ho studiato mai italiano, però quando ho insegnato all'università in Italia, io ho imparato con i 2 bellissime donne. Loro hanno imparato italiano con me. Yeah, I speak a little bit. I'm still rusty. I mean, I lived in Italy for almost 7 years. I taught at university for about 5, which is probably one of the most rewarding things. Never took a lesson on Italian, but basically I had 2 amazing assistants who, they taught me Italian, and I taught them how to trade. So it was a win-win for me. Thanks, man. Like I say, life's about experiences, Unfortunately, sometimes we get stuck in a rut where we feel like it's Groundhog Day. Every single day is the same thing, and it gets boring. Right now, I'm trying to get back to my roots and pick up my German. So I hope to, next time I'm back in Europe, go to Oktoberfest and be speaking in German as opposed to messing with broken English. Chris, you say through the best Halloween parties. I gotta disagree. I still throw the best Halloween parties. Still do. Yeah, last year was a year off. This year will be a year off as well because I will be in Las Vegas going to Fish concerts, but I still throw them, Chris. I'll get you an invite here soon. All right. Yes, I had, those are some legendary events out in Northern California, I'll tell you that. I was not a popular kid in school by any stretch. I knew everybody, but I wasn't like the cool kid. And then I started having really great parties, and I became the cool kid. All right, let's look at economic calendar for tomorrow now that we're going way too down the personal road in my life. Here's what we have cooking for Monday. So economic calendar-wise, you can see there's a lot of stuff on here. It really boils down to the U.S. side of things. Oops, not the donkey of the day. I'm hitting the wrong buttons. See what happens when you drink whiskey? There you go. I'm on the right page now. So in red box, I've got the U.S. stuff here, which is manufacturing data. So a lot of talk about manufacturing numbers. There's manufacturing data coming from all over the world on Monday. You've got Italy, France, Germany, the EU, and the U.S. all in one day. But really the part that I'm curious on is the rate at the bottom. You guys see down there that Australia is doing a rate announcement. Now, that's not expected to be anything different. It's expected to come out at 0.1%. However, if we look at the chart of the Aussie dollar, and I'll bring that up here, it's been on a pretty decent slide for the past few months. Now, this is obviously something that the Australian government wants. They want a weaker currency. It helps with exports. So, I'll be watching this to see what the stance by the RBA is going forward, to see, are they potentially thinking about maybe raising a little bit here? I don't know the inflation numbers for Australia right now, but when you have your currency getting this weak, maybe they can take the foot off the gas a little bit. All right, what else do we have cooking for next week? Here is your, did I already go through that? Oh yeah, there's really nothing going on with regards to earnings on Monday. It really starts to pick up on Tuesday, Wednesday, Thursday. Again, lots of oil companies reporting next week. All right, what else do I got? German and Russian seem to be hard to learn and crazy. Yeah, try Finnish. Are we invited? Well, we'll see if I open the doors to everybody. It's there's a lot of things that happen that, I make you lock your cell phones at the door, no pictures, no recording of anything. It's one of those wild pictures. One of those wild parts, excuse me. If you're invited and don't have the vaccine. Look, remember, I'm not the big vaxxer. I do think that it's good for some people, but I still think it hasn't been fully vetted. Definitely not an anti-vaxxer, but I'm not concerned if people have vaccines or not. Yes. Yep. That's your birthday in my life. Remember, it's the end of October. I'm a Scorpio at heart. Okay. So, what else do we have? I think I left my phone somewhere else. It's probably charging over there. So, it's 42 after, so we're pretty much near the end of it. Any last-minute questions or things you want me to go over before we wrap up for today, guys? I want to see how a former floor traders party. I remember I was a retail floor trader. I was not an institutional floor trader. I am definitely not ever making that claim. When you look at somebody like Bill Henner or Bob Dunn or Michael Young or Craig Weil, these are guys who actually traded on the floor. And that's one of my favorite things, is to sit there and just pick their brains, because if you look at what a floor trader did versus what retail, you and me, are doing now, in many cases, we're basically just watching a computer screen, doing technical analysis, maybe some fundamentals, but we're much more in tune with what price action is doing. Those guys weren't really doing that. They were really psychology and saying, I see what that guy over there is doing. I'll give you an example. I was on this floor of the Chicago Mercantile Exchange. This is probably 2005 or 2006, somewhere in that ballpark. And a friend of mine brought me onto the floor of the CME. And the guy was giving us a tour, because you have to have somebody walk you through the floor. You can't go by yourself. And the guy goes, one of my favorite things to do is, there was this one trader, I forgot the firm he worked for, but he said he was a pretty heavy hitter in this pit that he traded in. And he said, all I would do is watch his feet. I'm like, what? You watch his feet? I don't quite get it, because I'm looking at charts, I'm looking at, news feeds and things like, no, I would just watch his feet. And anytime this guy's heels would come off the floor, that was the sign that he was starting to make some trades or looking to make trades. And that's the only time this guy would ever get excited. He's like, oh, his heels came off the ground. I'm now going to watch and see what he does and try to, jump in front of his orders. But that's all psychology, right? Just find yourself that big fish and follow them and do whatever they do. I thought that was pretty cool. Let's see what else we got. You buy any Bitcoin recently? I didn't buy any Bitcoin. Well, I bought Bitcoin so that I could buy something else. So I bought some Solana. I bought quite a bit of Solana, which is good. I wanted to add a nice little position of Solana in my portfolio. And I bought some more Polkadot. So yes, I added some positions in my portfolio. And Algorand were three that I've added recently. How do you like the pop we've recently had? Of course, I love it, Patrick. My portfolio with cryptos it's decent, we'll say. And watching these pops is great. And no, I'm not nervous about it. I again see the long haul. I need to go back through my portfolio once I finish building the crypto class, which it's actually a cheers kind of day, because I finished recording the last video for the cryptocurrency on demand portion for Online Trading Academy. So that was a huge task. Now I got to work on the next project, but that was a big one. The crypto should be rolling out here in another week or two. Also, if we get your perspective on the relation to gold to Bitcoin, if there is one, let's look at that. I obviously am pretty aggressive in the crypto space. I think I'm more aggressive than most. Let me see, disable average volume. There we go. So let's put GLD at the bottom, and then actually let's put gold futures at the bottom, and then I'm going to bring up Bitcoin futures at the top. So you tell me. This is the easiest way to see if there's correlations between the two. Let's go copy window. I'll paste that window up here, and we will put in BTC. Come on. All right, right, so let's go at BTC. So now you see these guys side by side. And right now, I'm going to go back a little bit further because right now they look almost inverse, like almost completely inverse with regards to each other, right? You see gold sold off the early part of 2021 all the way through April, whereas Bitcoin just went gangbusters, and now they've kind of gone the opposite way. So maybe what you need to do is look at, let's say, a weekly time frame to look at a different perspective. And the challenge with this is Bitcoin is, because of its limited amount, and because the demand increases, you get big spikes like this, which completely disconnect any relationship. I believe, Patrick, this is what we're seeing. I believe that with Bitcoin, what you're getting is a lot of people mulling over the concept or question or probability that could Bitcoin replace gold as that safe haven asset because of its immutable nature and because you can't hack Bitcoin and you can't steal someone's Bitcoin. Gold's a bit different story. It's much harder to store, all kinds of issues with purity and all. There's challenges with both of these asset classes. And I think that you have, for the longest time, actually forever, gold has been it, right? That's where you go as a safe haven against inflation. Now I think you're getting part of that camp is splitting off and exploring. Let's use Bitcoin maybe as a hedge. So instead of maybe holding 10% of my portfolio just in gold, maybe I'm going to hold 5% in gold and 5% in crypto. And I think you're starting to see that, which in turn does what? I think it does actually create a correlation between the two. That's not evidenced by this price chart. Whether I look at it on a weekly, monthly, or daily, they do not look connected. But if I look at the intent of the asset, how it's structured and what it means, my mind tells me that you'll start to see that relationship form and get a little bit more connected over time. So I do think that there is a relationship between it. I think over time it'll become much more in parallel, if you will. I think that over the course of time, Bitcoin will have a much better predominant uptrend, whereas gold will have more fluctuations. Why? The limited nature of Bitcoin and demand, right? You're not seeing a lot of people just start demanding gold. You are seeing a lot of people demanding Bitcoin. How much input did you have on the CliK crypto rollout coming? Can you tell us anything about it? With regards to crypto and CliK, now you got to understand that that's something that's going to be well down the road. Right now they're working on the Forex rollout, so I'm not making any promises on cryptos in there. But yes, I did sit with the development team, and the goal is to have crypto. And what I did is I gave them a list of the top kind of 25 that I feel are critical. And I don't have any stable coins in there. Those aren't really, for me, trading vehicles. Those are safe haven vehicles where I can just go to cash and wait to buy crypto. So it'll really be 25 specific crypto projects or tokens, not stable coins. We will be able to search many more than that, but I'm kind of building a predefined watch list that'll be in CliK. You'll be able to do everything that you can with your Forex brokerage account because it's the same basic naming conventions with cryptocurrency. So you'll be able to chart them, you'll be able to trade them in sim and have watch lists and do filters. So that's coming, but that could be months out. Obviously, I wish it would be here right now so I could start teaching with it, but it is what it is, and I got to wait for the developers. But it is part of the discussion, and it should be coming sooner rather than later. It's funny how quickly it moved to the front of the plate with regards to being on the rollout. So great question, Mike. Let's see. Do they even have that amount of gold? Yeah, that's a great question, Patrick. And again, I am one that just doesn't trust anybody or anything. And you look at gold, and they say, "Oh, there's whatever 5 million tons of gold sitting in this vault." Is it really? Who weighed it? Where is it? I want to see audited paper, trails of all this stuff. And it just makes me too nervous when people talk about storage numbers. So I don't know. I don't trust that part either. In 5 years, Bitcoin will be risk-off asset. Oh man, that's a great question, Alan. Will it be a risk-off asset? I don't think that you'll ever curtail the volatility enough to call it a risk-off asset. I think it'll be a hybrid asset where you kind of have it's a risk-on and risk-off asset. I know it sounds stupid to say. You're like you're contradicting yourself, Merlin. Look, gold is that risk-off asset, right? You're basically, you don't want to take any risk. You're moving away. But think about gold. Even though we call it a risk-off asset, right? Risk-on would be buying stocks. Risk-off would be buying bonds, gold, something like that. It's still really volatile. I mean, gold isn't like this patron saint of lack of volatility. It's pretty volatile, right? You see some nice big swings in there. So Bitcoin, even if we do get mass adoption acceptance, I still think you're going to have the real big swings. Just the nature of the beast, especially if we have whales out there and people who are kind of cornering the market with regards to Bitcoin. So I really can't answer that one. That's a really difficult one for me to ask. One is Forex CliK rollout. I went without Compy. Again, I know that they're talking about a couple months until that rollout comes out. So a couple months, and hopefully we'll get that the Forex one. But given the development and kind of getting OTA getting their feet back on the ground with all the garbage that happened, it'll probably take a few months. Let's say a few months. Let's see. How did you guys flow traders survive the transition to computers when most others got wiped out? When I was floor trading, I was computers, right? So when I got started was back in 1998. That's when the computer revolution started. We had the SOS bandits, which was small order execution system. That changed and allowed you and me to now communicate directly with market makers, and that was right around 96. 98, we came in with ECNs, electronic communication networks. So now all of a sudden you and I could go directly to market makers as well as negotiate that bid-ask spread, and all of a sudden those spreads turned from dollars to pennies. So competition really made the markets much more fair and efficient. Now, I wasn't an institutional floor trader. I was always screen-based, right? So I wasn't the psychology stuff. How did people like Bob Dunn and Craig Weil and Marty Dim and Michael Young make it? By adaptation. They understand, okay, I know price action. I know psychology. Let me try to convey what I learned through the psychology aspect. When I knew price was running, what was the psychology of the floor like? What happened out there? What did order flow look like? How were people screaming and yelling their hand signals? From there, they look at the price charts and say, okay, when this action happened, when people went crazy on the trading floor, this is what it looked like on a price chart. And you start to build pattern recognition. That's really what the supply and demand methodology is built around, is saying, when we have these big run-ups or run-downs, what was it like on that trading floor, right? Because you knew when things were going to move on the trading floor because it was all psychological. You were basically trading good old boy network. That network's gone. Now you got to figure out how it operates with screen-based. So a lot of those guys took lessons. I mean, a lot of them are online trading academy students just trying to see the technology, meaning these platforms like TradeStation or Thinkorswim or CyberTrader, things like that, and saying, okay, I'll take my psychology knowledge of markets and behavior analysis and apply that to the price charts. And that's really how these guys made it. It's funny because most of the guys I know that are floor traders doing pretty good. And if you think about, again, I've mentioned this so many times, I feel like it's just repeating myself, but if you were a floor trader or you're a screen-based trader, or doesn't matter what type of trader you are, where you came from, as long as you have risk management and you don't let things destroy you, you'll probably be okay in the long run, right? You're going to go through ups and downs regardless of what your trading style is, but if you manage those losses and don't take big, huge losses which destroy your account, you'll do fine. Just, you cannot take... I'm more than happy to take colossal winners. Love it. I can't take a colossal loss. And if I look at a standard sampling distribution, and you'll go to bell curve stuff, go to your statistics, and I have this giant curve of results, most of your trades are going to happen somewhere in the middle. I mean, it's a simple bell curve piece. If I can keep my losses at one standard deviation worth of losses, so no two standard deviations, no threes, but I can keep my winners, majority of which will be one standard deviation winners, but I get a couple of twos or maybe some threes and fours, your future as a trader is very bright and has nothing to do with your strategy. Has nothing to do with what you bought or how you bought it or when you bought it. It has everything to do with how much you lose. All right. Good. I will finally be moved in. Good to have. Hold on, mama. Good to have you with us. Gold futures is better than physical gold. Yes, for a couple of reasons. Number one is tradable. It's liquid, right? You can get in and out. However, if you're like me and don't trust people, you like to hold those assets. In that sense, physical gold is probably the best, right? If all hell breaks loose and there's some issue on the CME and gold futures get all screwed up, you have physical gold, right? If you need to pay somebody, you're like, oh, well, I'll pay you with some gold futures contracts. I just need to log into an account. Maybe I can figure out how to transfer them to your... Not going to work, right? Physical gold allows you to transfer things back and forth, which, again, is why I like the digital asset side of things, because the market's never closed, and I can send stuff to you very easily. Let's see. So most flow traders didn't really look at price. No, they did not. Nope. Yes, and Alan says, I heard that some draw them out by hand. A lot of them did draw them out by hand. But that was really getting into the later 90s. That all the guys I talked to from like the 70s, it was all psychology. They would know somebody and be watching the big fish on the floor. When that big guy would jump in it, boom, you follow what they're doing. It was really this almost follow the big guy network. And if you ever talked to Bob Dunn or these other guys I mentioned, they all knew the big guys on the floors. And they would be watching them saying, okay, as soon as that guy starts to make a move, boom, I'm jumping in. I'm doing whatever he's doing, right? It's It's fun. It's a cool experience. I wish I was alive to experience that. I'm just very happy I had the opportunity to be on a retail trading floor, which is people like you and me, all sitting in a room making trades. That was a great experience, and a lot of those stories are in my book. Okay, let's see. Bob said Alan, some guy made his trades off a dude raising his feet. Yeah. It's just you have to find out what is causing people to buy or sell. Period. And if you knew some guy next to you had a ton of money and he was a heavy hitter, and when he lifted his feet off the ground, that was his tell, great. Those pits to me were just gigantic poker games. People trying to bluff, show poker face. I mean, it's a cool experience. Just being on there one day, I could feel the energy on that floor, and I wish I would have been there more often. All right, that's going to do it for me, because I know Big Eb's like looking at the clock thinking, hey, I can get him to go 3 more minutes. It's going to be an hour Friday show. Not going to happen, brother. It is Friday. I already went through the economic calendar, already went through earnings stuff. Right now, I don't have any guests lined up. Tom, you did mention something interesting, and I'll just answer it now because maybe others can share the experience. Tom was asking me about getting guests on the program. Part of it is I just have a problem in time constraints and reaching out to people to get them on the show. If there's somebody you want on the show, I'm pretty much open to bringing almost anybody on the program except the weasel that's out in Chicago and started his own trading school. I want nothing to do with that dirtbag. But other people I'm happy to have on, because I think we can learn from almost everybody, whether they're good or bad, right? And I'm not going to throw anybody under the bus. Really want to make sure that any guest comes on, feels comfortable, and shares their ideas and thoughts on the market. I may not agree with them, and you may not agree with them, but I'm not going to go after anybody and tear them down, except one person. But I'm happy to bring on anybody. What's the turnaround getting them on the show? As you guys see, I pretty much have Monday through Friday open. I like to have guests on Monday through Thursday because I like to do Fridays by myself. But if that's the case, I'm happy to have guests on any day. And I don't have anybody scheduled for the remainder of the year. So if there's a spot, you can just tell them, hey, you want to be on a show Tuesday at 2 o'clock? Good, let's book it. Make it happen. Let's do it. Especially if that's something you guys want to see. All right, let's see. Got to just publish the book. I know. I know I need to. Damn it. Maybe you guys, you've been pushing me. I have a feeling I just need to bite the bullet and be done with it. All right, cool. I've got 87 seconds left, so I will have to wrap this show up. Can we in the future talk about trending lines? Sure. You mean draw trend lines and utilization? Because to me, trend lines are very subjective. Very, very subjective. But we can talk about trend following tools and rules and all that type of stuff. All right, cool. That's going to do it for me, everybody. Hope you guys enjoyed today's show. If you did, give me a thumbs up. If you have comments, feedback, easy, please email me. I love the emails I get, and those of you sending questions today, I do appreciate it. But send me questions, comments, feedback at TraderMerlin@gmail.com. If you have anybody that you want to have as a guest on the program, you can send me their contact info, and I'll try to reach out. If not, you can reach out and book guests for the show. I have no problem with that. I'll be the end filter, but mostly I'll be cool with bringing on whoever you guys like. Cool. Thank you guys so much. Hope you guys have a fantastic weekend. Go do something fun. Have a nice, fantastic weekend and be safe. I'll see you guys Monday.